Gaurav, hi. Good to have you with us. How have you been?
Hi, Ashu. How are you doing?
I am doing very well, Gaurav. This is an exciting session, right? Like I was telling you earlier, there was a lot of conversation that had happened, right? And all the good work that you've been doing, you've been evangelizing, right? In the startup ecosystem at a national level and in tier two, tier three cities, right? Was being discussed across many friends, right? Who you've invested in. And I was genuinely looking forward to this conversation, right? Because there is little which has happened to cultivate tier two, tier three, right? I think Venture Catalyst has led the way, right? And the good part is there have been many very focused people like yourself, right, who've come on board, joined hands to cultivate that ecosystem. Thus, it becomes very, very important, right? Because my sense is, I think tier two, tier three, going forward is going to be a massive play, right? Be it in terms of entrepreneurs that we're going to see, be it in terms of capital that we're going to see, the arbitrage is gone, right? Thus, it makes the entire conversation very interesting to understand nuances of what's playing out in tier two, tier three, right?
Yeah.
With that, it's good to have you with us. Um, I'd love you to take us through a quick background, Gaurav, and we dive into the conversation for the day.
Thank you, Ashu. Thank you for this. And I'm also equally looking forward for it because I know that the times are very exciting, and the next 3-4 years is going to be great for startup ecosystem.
Right.
So I am a chartered accountant by qualification. Come from Ajmer city in Rajasthan, and I did my chartered accountancy, and then joined Reliance as an employee for 4 years, worked with them, and then started my own investment banking practice in 2002. And for about close to 20 years, I'm into investment banking. And in 2011, I came to know about startup. That was the first, because I was a director in Thai Gujarat board, and there I first came to know about angel investing. And for about 3-4 years, I was just figuring out that can somebody from Surat invest in a startup,
Right.
And it took some time. And then in 2015, I started my journey as an angel investor with Apur. And when Apur started Venture Catalyst, I was, I was part of that. And as on today, also I'm a stakeholder in Venture Catalyst.
Right.
So with that, I have learned this entire ecosystem by investing, and then figuring out that what is a problem a tier 2 startup founder faces, and what a tier 2, tier 3, tier 4, tier 5 investor faces, because he doesn't have an access, he doesn't know about this asset class at all. So so I connect from that, because I stay in Surat, which is again a tier 2, a tier 3 city in India, and I come from Ajmer, which is tier 5 or tier 4 in India. So basically that gives me a comfort of understanding this entire ecosystem, this piece, and the thought process of investors coming from these geographies.
Phenomenal. Gaurav, before, of course, we dive into the session, the deeper aspects of what we want to cover, right? And specifically around tier two and tier three, right? And there are many important aspects that I'd love to sort of, I'd love to deliberate with you on. But before we do that, I'd love to hear from you about your portfolio, right? Because you have a fairly diverse and a large portfolio, right? You have a certain thesis around it. I'd love to understand, the diversity of your portfolio and the thesis that you have.
So right now I am invested in more than 80 plus startups, to be precise, 84 startups right now. Right. And I have 17 close to 17 sectors which are there, because from the day one I was very clear that I want to be sector agnostic.
Right.
I don't want to focus on one sector, because sometimes some tech sector works, and I think probably it doesn't work the sector way. It works more of a founder way, and the problem they are solving.
Right.
So that's what is my take on it. And fortunately, being part of the Bharat Pay journey, I was one of the few investors of Bharat Pay, Beardo, Super Daily, Find, Innovate, and so many such startups who are doing phenomenally great. Kutlut is one of my portfolio company. Jasmeet, I really admire that boy. He really does very good. Then Kutlut is a recently edutech startup which I am mentoring also. So there are so many startups I have invested in last almost 6 years.
Interesting. Gaurav, I'd love to understand your thesis, right? I mean, coming from a tier 2 city, and it's important, right? Coming from a tier 2 city where you are, day in, day out dealing with many promoters, business owners, entrepreneurs, right? Who come from that vicinity. There are two things that are of very critical importance, right? One is the exposure, right? People in tier 2, tier 3 cities are necessarily very risk averse, right? They want to look at opportunities which are very visible, right? Very clear in terms of the returns that they can offer, right? Are asset backed, right? And that's a typical tendency that you come across, right? Uh, Second, startups offer a very different kind of it's a different ball game altogether, right? The risks are very, very high. This business might survive, might not survive, right? And in India, the complexity is very high, right? In that context, I'd love to hear your thesis, right? Given that you are operating in that ecosystem, right? Was there a rub off on you of how
You
local business owners and entrepreneurs thought, right?
so
And how did
Ajay,
you sort of beat that?
So, Aju, I will tell you a very interesting fact because
Sure.
being a chartered accountant runs a very large firm, a financial supermarket, which is my
Right.
own company. We have more than 400 employees with us. So I have more than 4,000 SME clients with us.
Right.
So that has given me an outstanding understanding of how an entrepreneur of an SME segment thinks.
Right.
Because they are eventually the investors.
Right.
Primarily the money is coming from those angel investors who are business angel investors.
Right.
My thesis is very simple and it has evolved over the time. I would not say that when I have written my first check, it was the same. But
Right.
out of writing these checks, I have found that there are 3P philosophy which I follow, which is a promoter,
Right.
product, and potential market. These are the three things which I see, and
Right.
out of which I give 60% weightage to the founder or the promoter, and 20% to product and 20% to potential market. So for me, first is the problem which he's solving. I'm not worried how powerful solution he has.
Right.
I am more worried that how well connected he is to the problem. Is he understanding the problem well? Is he knowing his problem well, which he's solving? Because you pivot as an entrepreneur, as a startup founder, you pivot, you change your startup solution which you are having. So that's my investment thesis. And I think I would like to tell you one thing, which I think probably there is a myth available in the tier ones of India, that the people sitting in tier 2, 3, 4, 5 are not risk takers. They are huge risk takers. Rather, they are a bigger risk takers because they don't have fund managers available in the city. They don't have a luxury of going through only the PMSs or to the large business groups or fund managers sitting with him and explaining the risk and the upside and the downside. They are discovering their risk by themselves. And they're open to that. They know that where they are venturing into. And I think I've always told people that I never compare, this asset class with equity. I always compare it with real estate. Because the language which Indian tier 2, 3, 4, 5, 6 people understand for valuation is a real estate.
Absolutely.
And when you connect it with real estate, they can understand better. They can understand, yes, this is what is available in startup ecosystem. And I think that I'm being very honest, that I have taken more than 100 sessions of the tier 2, tier 3, tier 4 now for explaining them what is this asset class, how is this, what you should do, what are the do's, what are the don'ts, how should you do, how much money you should allocate, and all those things. And I think
very interesting.
They are very interested. They are very invested. I think we have some myth going on in the top 6 cities of the India that people there understands more. Sometimes when I do conversation with people understand that startup coming from Bangalore or from Jaipur or from or maybe from Gurgaon has a better understanding. But I have a very different opinion, friends. I have a founder who's coming from a Bareilly.
Interesting.
And the kind of he has a connect. And recently today evening we have a pitch, and I am projecting one girl, or we are pitching one lady who's basically a founder from a small city, Dehradun. And she's pitching. She has migrated to Surat for a marriage, and now she's pet care product. She is Joyvin. She's doing, and phenomenal, very good understanding, coming from a very good background, having a very relevant experience. And so that's I think is there. And when I was saying about the founder or a promoter, I always constantly look for 4 things: passion, attitude, experience, and knowledge. And they have their own weightage. So somebody coming with a passion, that alone doesn't help, because you need to have a relevant knowledge and experience around what you're solving. And if all the 3 are there, but attitude is not right, you are not you are not an investor friendly person, you are not somebody who can take team along with you, I think that probably doesn't work. So I think all the 4 pieces are very important. You need to have a relevant knowledge, and you need to have a relevant experience also, and you need to have a attitude and a passion.
Right, very interesting. Gaurav, you alluded to some very, very interesting facts, right? And I think it also is a reflection of the certain sectors that you have a liking to, right? For example, D2C, right? Or what you're mentioning, and I think D2C is a phenomenal possibility. A lot of tier two, tier three, you know, startups and founders, right, are going to be doing phenomenally well, right? And we are already seeing early signs of it, right? But before I do that, what I want to understand is, I think no conversation today can go on without talking of COVID, right? COVID has changed how the consumer outlook is, right? It's reduced the arbitrage. It's just made the entire ecosystem very, very dynamic on the consumer side of things, right? Uh, you know the the arbitrage that existed between a tier A city and a tier 2 city is actually kind of almost diminished, right? And largely because you can now order online, your influence is very global, right? So a kid sitting in Dehradun has an equally good influence as a kid possibly sitting, or an individual sitting in, say, a tier 1 city like a Gurgaon or Bangalore or Bombay or whatever, right? uh, that's going to put startups and founders under a very different circumstance, right? The pressure is going to be very, very high. Do you think uh, the founders today, and this is not a tier two, tier three city question, right? This is a more generic question, right? This is more on the quality of founders, right? Do you think prepared uh, to kind of deal with the kind of pressures and the change in behavior and consumption which is going to happen? Do you think that's something which is going to take a little time to get built in the process, or do you think that exists and founders will very quickly adapt to it? What's been your experience, right? I'd love to hear from
So I have a very, very, very good understanding because March 2020, I was in a very busy state with my business and everything, and COVID came. And for about 8 months, I devoted entirely to expansion of India, venture catalyst across India. Then, we founded Circle took birth, and I could reach out across India,
you.
founders as well as investors.
Right,
And the most positive thing which has happened, as you very correctly said, that the information arbitrage or the kind of knowledge arbitrage which was
right,
available or which was at different levels has diminished.
right,
It has gone away. Now people sitting at Surat are very well aware as the people at Bangalore are. There is
right,
absolutely no why, because people do understand the importance of it. Yesterday, I was to tell you was this technology is there, they will be doing this. Now they've experienced it. In,
right.
in their one year, they could experience that this is what is what is there, what is available for them, and
Right.
how it can benefit them. How it can benefit them in all respects in their own lives. Maybe a food delivery, maybe a travel, maybe a ticket booking, maybe whatever which they were doing in a traditional environment. They by because of the force, because of the reason, they will have to shift it to this, and now they are liking it. And when they're liking it, they are associating that importance also. They are feeling that yes, it is, as an investor I'm talking of,
Right.
they are feeling that yeah, it is important. Yeah, it can create value. If you see all the three IPOs which has come, maybe Nykaa, Paytm or Zomato, retail investors are coming all the way from every city.
Right.
That itself validates this, that a small investor who's just a 14,000, 15,000 rupee check writer sitting in a tier 3, 4, 5 is also interested in these kind of tech companies, because he's appreciating the work which they are doing, and they could really sense and know. Certainly Demon has had a very small section of people which were in a digital payment or something like that. But I think this 8 months or 18 months, actually, to be very honest, 18 months have given a very different kind of a perspective. And it happens with the founders also. Founders pivoted very, very superbly. I think
I completely agree with you. But I think the ball is still out, right? And I think each one of us will have to see how the consumer behavior changes, right? And I think that's possibly going to get reflected in another year's time, right? Year and a half's time, right? In terms of, for example, I mean, I'm actually surprised by this behavior, right? And I'm sure you would have observed the same. Product life cycles are changing, right? Our kids are ordering stuff like on the go very quickly, right? And the fads are flying very quick, and kind of the newer fad is picking up much faster, right? And I think that's going to put a very different kind of a pressure on supply chain, on production, on creativity, which also opens up an opportunity for many other businesses, right? Gaurav, I'm going to come to a very important question, right? And something that you alluded to in the point that you highlighted. What has listing done to the investors in tier 2, tier 3 markets, right? Has that given them, there were a lot of them who've been on the fence, right? They've known of what's happening in the startup ecosystem. There are many naysayers who operate in secondary markets, who've been questioning the valuations, for example, right? And that has kept a lot of retail investors at bay, not wanting to necessarily participate, right? And a lot of these retail investors come from tier 2, tier 3 cities, right? What's your sense of it, right? Or what we're seeing of, like you said, right? Nykaa getting listed, Zomato getting listed, Paytm happened, right? What do you make out of this, right? Is this giving a very different kind of a confidence that, there are companies which are building for the future? These are companies which will become profitable over time. They are engaging their customers very, very high vis-a-vis a lot of traditional companies. How are retail investors, who participate in the secondary markets, looking at primary markets now and the startup ecosystem?
So it's a very interesting question. I always said people that when Zomato happened, the entire thing and the entire landscape changed.
Right.
On the same day, the entire landscape changed. Why? Why? Because we were constantly being asked two questions by investors. Why is this valuation justified, and where will I get the exit from?
Right.
What's my exit point? Who's going to be giving me the exit? Every time there was a constant question from last 6-7 years. I was always hearing these two things. Why is this valuation relevant? How are you valuing this company? Is there a right science? All such kind of discussions. And second was about the exit.
Right.
And to be very honest with you, first we had a reply because there were theses, there were logics to that. But second, absolutely no fixed reply.
Right.
We were not very sure that what replying are we giving, are that right? The venture partner, the VC will come and they will do the secondary and you will get exit, or there'll be a corporate acquisition or sides of things. But the Zomato happened and people realized, yes, maybe 10 years, maybe 8 years, maybe 12 years. If you have invested with the right company, there is a possibility of getting an exit. And I think that piece which discovered did not have only the retail investor. It had the globe also. Global investors also getting interested in India. Because before that, they were thinking that Indian companies can't go to an IPO. Indian startups can't go to an IPO. And I think that piece is helpful from two perspectives. One, from a retail, a small investor sitting in a city like Bareilly, Ajmer, Gwalior, Bhopal, they also understand that, yes, listing is possible and I will get my money back or I will get my value back. And the same way, people VC sitting in Japan or US or in Europe are also realizing that this is the right market where we should invest. So I think probably it has dramatically changed the entire ecosystem.
That's very interesting, Gaurav. And somebody very, on LinkedIn made a very, a quirky, but a very interesting comment, right? And he said that, all the money that his wife had spent on Nykaa, right, the stock appreciation gave him the money back, right? Which is very interesting. That was very interesting, right?
Quite true.
Gaurav, you highlighted something very important, right? You actually touched upon the liquidity aspect, right? Now, we've seen a phenomenal surge, right? There are like 30 plus unicorns that have, we've seen the surge, right? And honestly, none of us, I'm sure, nor you, nor me, nor anybody who's been in the system anticipated that we're going to see such kind of a rush, right? A lot of investors that I used to speak with, right? 18, 19, right? Foreign money, which was sitting outside, right, had certain apprehensions. India was always a subset of the larger race that used to happen, right? But, we see absolutely phenomenal growth in the funds that came into India, right? People, these, and the fund managers took very bold calls very quickly, right? And giving very large valuations, right? What do you make out of this entire thing, right? Also, what has happened is that, the expectation of founders from a valuation standpoint is kind of grown, right? Do you think that's justified, right? Or is this something which needs to normalize? Because, we're still a market which is very complicated at many levels, right? What do you make out of this?
So there are two parts to it. When you are asking, what do you think about the unicorns taking birth? I'm pretty sure that it is a demonstration of the strength which India has. Right. We were the pricing, the valuation is always discounting the future. Right. Whenever you get some valuation, you are discounting the future. You are saying that the future is looking more brighter than the current situation. And I'm in favor of that. I'm seeing that another 2 years we are going to be seeing 100 unicorns taking birth from India, including these 30. Which is part one, which is very, very logical. Number two is when you are saying valuation, certainly there is going to be an improvement. There is going to be whenever the supply of the liquidity, when the liquidity is high or the supply of the fund is high, valuation surge, because you have a very less options to invest. You have a very less right options to invest. Here, there are companies who are still struggling to get the money.
Right.
But there are some good companies are getting better valuation. And that happens always in these kind of market. Because when you are investing and the money, so I always say now the problem which was earlier to find an investor, which probably Venture Catalyst unlocked, is no more exists.
Right.
Now finding a right startup to invest is a bigger piece, which we all have to discover. And we have to work with founders now. We have to work with founders. It's not only the capital which you can offer to the founder. Now you have to work with them. You have to get them mentoring. You have to get them business. Now you have to get them a network. So you have to associate your founder in a way that he doesn't only get the check from you, only capital access to you, he gets much more. And I think probably here where we Founder Circle, we are very conscious. We are discovering three pieces: funding, community, and business. And we say we are discovering these three for our founders. We wanted to make sure that they get connected to a strategic investors who can help them in this entire journey. And
fantastic. Gaurav, I'm gonna come to is a slightly different this thing, right? And that is of cultivating tier 2 and tier 3 cities, right? While of course we're talking about what we're doing, right? You're the champion of who's been really sort of building and hustling to sort of cultivate the tier 2, tier 3 ecosystem, right? What are some of those things that you think are very important, right? You kind of mentioned about it, right? That there is little participation that happens from. I mean, Indian investors have not been very, very equity savvy, right? Unlike Western countries, right? You've been evangelizing that, you've been channelizing that, right? Now, a lot of listing and a lot of international liquidity coming in, basically corroborates the thesis that India is a market which is eventually going to transform, and people are seeding in that, right? Which essentially becomes a good starting point for many retail investors, right? What are some of the things that you think can be done to cultivate tier 2, tier 3 ecosystem much better than what we've seen, right? And I'm sure you would agree with this, right? That what we're seeing is less than 1% or less than 0.5% of these people who are potentially participating, right? So what are some of those things that, for example, you think needs to be done and you possibly doing it, right? And what have been your experiences while you've been cultivating this?
So Ashu, I would like to tell you first, very, very interesting thing. How many mutual fund investors do you think India has?
I mean, I know, the Demat accounts are above 8 crores, right?
So approximately 5 crores are the mutual fund investors in India.
Right.
How many angel investors do you think India has?
About 20,000, little less than 20,000.
So Monda Spies report says 3,000, and I say 5,000 people.
Interesting.
5 crore mutual fund investors.
Right. 5,000
angel investors. It's not even 0.01%. So huge space. So one part is there's a huge space. 50,000, 5 lakh is no brainer. It's absolutely no brainer. Number one. Number two, you will have to connect to those people. You can't be sitting in Bangalore and talking about it. You can't be sitting in Gurgaon and talking about it. You can't be sitting in South Mumbai and talking about it. You need somebody who's locally doing it, who's talking about it, who understands what's the kind of a problem or what is the kind of a pitch investor from a tier 2, tier 3, tier 4 is interested to listen. What's his problem? What is the ecosystem? Where from he's investing money? What's the cash flow thing he's passing through? You have to understand that. And third, which I personally feel we have to work with, is language. I think we have to promote Hindi more. Because the biggest problem when I come across, investors or startups, the biggest fear is everything is in English. I tell you very frankly,
I agree with you.
It looks, I know so many big Marwadi businessmen or even Gujarati businessmen. They don't want to be, joggled by these high words. When you are saying D2C, they don't have any understanding of D2C. When you are saying MRR, they don't understand. GMB, they don't understand. They wanted to be understood in a very layman's language. They wanted to understand it in a very layman's language. They wanted to be getting connected to that startup founder in their own language. I think which probably has to be done. And wherever I get an opportunity, I try to speak as much Hindi as I can. Whenever I'm communicating, because our interview is in English, so I'd like to keep myself, away from using that. But so that I think people will say, how does it matter? It does matter. It does matter, because when you are not being able to connect to that startup founders sitting in tier 2, tier 5. He's an awesome idea, but he thinks that anybody who speaks better English can present it better. I'm not the right person. And I think we have to take out that. We have to take out that. We have to encourage our youths sitting in tier 5, 4, that if you're solving a right problem, please do come. Language doesn't matter. If you'll pitch it in Marathi, I will listen to you in Marathi and I will tell you, boss, kya fix kar sakta hai tu? What else? So I think that is a more important thing. So
I think you've touched upon a very, very important moot point, Gaurav. I think with the kind of market that we are, with the kind of complexities that we have, I think these inhibitions need to go away, right? And I completely agree with you there on that. Gaurav, I have a very fundamental question, right? When you talk to tier 2, tier 3 cities, right? And promoters out of these, who are largely now the investors who are participating in all these companies, right? There's a huge problem when it comes to valuation, right? These are people who understand cash flows, right? Now, what you're funding is essentially non-cash flow businesses or early stage businesses which are not, really focusing on cash flows at that given point in time because they're possibly building engagement, right? Now, that does not necessarily mean that they're not savvy and sharp when it comes to understanding revenues. It's just that they are, kind of taking a call of pursuing it at a later point, right? When they get to a certain scale. One, how difficult is it to communicate that? That's number one. Number two, when you talk to businessmen, right, who come from an SME, MSME setup, right, a large part of which you're already interacting with, they look at assets from a cost of replication standpoint, right? That how is it that you can replicate the asset? They don't necessarily come from an ecosystem or they don't understand the large value that you can give to a tech asset, right? What do you do in that case, right? I mean, how do you tackle these issues, right? Or do you think this is with exposure, this is changing now, right? Or part of it is changing, part of it needs, effort, it needs constant prodding, it needs constant information, it needs constant engagement, right? At your level to ensure that many of them get convinced they come in and participate, right? What's the status there?
So we have to educate people. We have to educate all the investors across these tier 2, tier 3. And because they are sharp businessmen. They are sharp businessmen. They are understanding the difference between a cash flow business and a business which is building on technology and can scale overnight to a next level. And then they can change geography very fast. They understand that. But you will have to tell them that, brick and mortar businesses have their own advantages. Traditional businesses have their own advantages. But when the technology businesses are there, and I'm telling you, fortunately, pandemic helped a lot. Pandemic halted us because previously they were listening. Now they are using. They can relate to that problem. They can relate to that problem which is being there. Glamio Health. We have invested in a company called Glamio Health. Is that they are aggregating the operations of the normal operations. Previously, people used to never think like that. Now people are okay with it. They are okay to read the ratings of, and they are the people coming from Bareilly. Is interested to get operated by this online platform, because they understand that rating of the doctor, the kind of feedback which is coming in. Now people are traveling more and more. They are getting that kind of feedback. So I think education is the only thing which is going to be making the difference. And at one point of time, as the Mutual Fund Association has done, Mutual Fund Sahi Hai. I think that kind of a drive is desired. I think because when you wanted to create an asset class don't create like that. You have to work for this. You have to really put an effort to create that asset class because you have to build a confidence. You don't need money of 50 people or 500 people or 5,000 people. You need money of 1,000 or 10 million people or a crore people or 2 crore, 3 crore people. You need money. So you need to build a confidence and you need to say that boss, whatever is happening is right. Whatever stories you are listening that somebody did this and that, that are not the right stories. And I think curated platforms like us helps a lot because if I have got 31 companies invested in last 1 year, I must have seen close to 3,000 companies, maybe more. Maybe more. So you will have to understand that the percentage is almost about 1% of, even less than that. Less than 1% is the success ratio. So they will have to understand that. They have to understand the portfolio approach. They should be told that whatever investable asset you have, you can't go beyond 5% or 10% of your asset to be investing in startup because it's a very non-liquid asset class. So whenever I start with communication, I say, boss, whatever investable, don't calculate your building your house as an asset. Only the investable asset. Just take out 5. If you have an investable asset of 1 crore rupees, you are eligible to invest only 5 lakh to 10 lakh rupees in a startup. If you are investing beyond that, you are taking a risk. Please beware of that. Don't do that. So I think that need to be told, and I think people do understand, and businessmen understand the language of money. They are very sharp. They are very, whatever education qualifications they have, but they are very sharp, understanding the logic and the numbers of how does it work.
No, I think also, I think, Gaurav, I think you're underplaying your role, right? I think what really is important, and I come from a tier 2 city, right? And I know, and I mean, my family has business interests, right? So I understand, how they think and how they look, right? I think you're really underplaying your role, right? I think there is always a very key requirement of somebody that they know who knows it best, right? I think that that entire play is very important, and that person is very, very important. And I think that's essentially what you're doing, right? You're giving them that confidence and comfort, saying that, listen, you don't understand the asset class. Fair enough. I am there. My team is there. We're possibly taking care of this, right? And we're going to bring you the best, right? We might not be able to guarantee you the return, but that's the nature of the business. But we will get you the best in class, right? And I think that's, I mean, you're the hero of this, of what's happening in tier 2 and tier 3, right? And I would request you not to underplay your role. I think it's important that we celebrate more and more evangelists like yourself, right, who are really sort of fighting for the cause. And I think that's what is going to bring in this capital on that. But Gaurav, I'm going to move to the next question, right, which is again a very, very interesting question, right? COVID has changed this ecosystem. COVID has changed the consumer behavior, something that we've touched upon across our conversation, right? What I want to understand is, how has your thesis changed, right? What are some of the things, what are some of the sectors that you're now looking at? For example, D2C has become very, very exciting, right? But D2C is also getting very quickly commoditized, right? Healthcare you spoke of, right? Healthcare again is getting very quickly commoditized, right? There's a lot of transparency which is coming in, right? So while of course there are opportunities that are now visible, there is transparency which is coming in, right? Which essentially means that there are going to be little abnormal profits that a business can have or build over a period of time, right? They'll constantly be under pressure to reduce costs, right? What's your take on the portfolio thesis, and which are the sectors they think have become exciting?
So I tell you very frankly, I think COVID has given a benefit to 4 sectors clearly,
right,
which is in edutech, fintech,
right,
meditech, or health tech, whatever you call it, and D2C.
Mm-hmm.
These are the 4 sectors which have got benefited directly from the COVID and post-COVID scenarios and all. But now things are changing, dramatically changing. Previously, we were all, I was before, almost about 10 days before, I was talking to a unicorn founder, and we had a very large conversation of about 2.5 hours, and we were just discussing about it. And I think one thing which is coming up now, we are looking for a serious, technology products.
Right.
Now, India is ready for a next level of technology products which are coming up. Now we are going to be seeing a serious technology coming, not the platform kind of a thing, not the aggregator platforms I'm talking of. I'm talking about a real technology which can change the world, probably like a WhatsApp. Is India ready for that? I am thinking that now the next big thing which is going to be coming will be a serious technology products like that, which will be coming up. And it may take some time in the deep tech things or in the artificial intelligence thing, but I am pretty sure that India is going to be seeing that kind of a thing, because normally it happens that first thing which is have more users get affected first, and then the things which are having a less users get affected last. And but the kind of impact which they create is little deeper, and which will be creating a huge value. So for me, these 4-5 sectors are doing very well. But I'm quite interested into deep tech things, into an AI, serious AI, not the just for a lot of founders use, which is that my technology is working on an AI. It's not a normal logic is there. So so that kind of a thing I'm seeing that.
And Gaurav, within D2C, what are you looking at?
So there are multiple things which is happening. Like I said, the pet care, which is happening, the a lot of jewelry, artificial jewelry thing is happening a lot. And Nykaa has given a boost to a very new segment, which is a cosmetic and other things, which is, so there's going to be, I think in this entire segment, there's going to be a huge thing, because a lot of people are getting attracted to it. I tell you very interesting fact. I think probably nobody must be knowing this. Surat's now biggest growth is an online platforms here. D2C.
Interesting.
Huge. Like a textile is going in a very different way. I know few of the friends who are doing 500-600 crores of turnover on these platforms, which I've never heard. So when somebody saying that the impact is there, I think ground impact is very much large, because where from you will get the production, where from you will get the products. This is the kind of thing which is happening. Like in food supplements, huge work is happening in food supplements.
Right.
Like protein, whey protein. The peanut butters and all those things. I am aware of few. So the lot of such things are happening. Specifically.
Interesting. Something which is close to your heart. Would you want to give us a tip?
Not right
I
now.
think it's unfair. Fair enough.
Yeah.
No, I was just, this was more fun, right? No, but I think I completely agree with what you're saying. I think tier two is going to explode in many ways, right? Now, got to wait towards the end of a conversation, right? And I cannot let you go without asking you two things, right? So my question number one is, what are the two or three things that you would want to communicate with retail investors across tier two, tier three cities in India, right? What will be your advice to them? Quick 3 points.
So number one, always follow a portfolio approach. Never overboard the startup. You should be restricting yourself with a 5 to 10% of the investable amount. Number one. Number two, only get associated with a right curated platform to invest. Never invest like a individual who has somebody come to you, a friend or a relative, and you are writing a check. It doesn't work that way. You should really not look at that way. Third, be participative. Listen to the pitch. Listen what the kind of an idea. Don't say that aap paisa laga rahe ho to main bhi laga deta hu, types of, which I normally see in a tier 2, tier 3, tier 5. Never do that. Evaluate the idea. It may be 30 ideas. You may like one and do them. I think these are the 3 things I wanted to really tell people.
Awesome. And Gaurav, my last question, right? And this is more towards founders, right? I do this. This is usually my last conversation across all conversations, right? I very firmly believe, be it an investor, be it a founder, right? Who's scale, they always have an advice to give, right? And there are many aspirants, right? There are many people who are, fighting it day in, day out, right? Against all odds, right? Compulsion of family, compulsion of, career, other compulsions, right? Girlfriend, boyfriend, all of that, right? And they still choose to sort of pursue the path, right? It's always important for them to have right directions, right advice, right? What could help them get to their aim faster, their goal faster, right? Achieve the milestones they've set, right? What will that advice be, right? And I specifically got given that you're dealing with a lot of tier two, tier three. You've invested in a lot of tier A market founders, right? And class A founders, right? But I want specifically you to give out advice to tier two, tier three founders, right? Because that's where the innate that aggression and that aspiration really is, right? So I would want you to give that advice for founders who are pursuing it, of the Kanpurs of the world and the Lucknows of the world and the Bhopals of the world. I'd love you to give 2 or 3 pointers for the founders who are operating out these markets.
For me, the standout is again 3 P's: passion, people, process.
Right.
So follow your passion, hire right people, and do everything with process. That's what I always say people. And I wanted to say founders, for you, 2 things are very important: focus and passion.
Right.
Keep your focus right. What you wanted to achieve. Don't because lot of attractions come, lot of diversions come, lot of things come. And if you are not passionate, you will not be able to make it to the top. I'm pretty sure. I have lived in my life and I've seen in my life, the people who are the biggest differentiator are not the knowledge oriented people. The people who are more passionate, maybe having a less knowledge, reach to the top. So I think that's what I wanted to request. Follow your passion and focus on whatever you are doing.
Gaurav, on that note, thank you so much for doing this, right? And I completely agree with the last point that you've mentioned, right? I think it's that attitude which matters the most, right? Knowledge is important, but attitude and approach and passion and energy is the most important, right? Gaurav, thank you so much for taking the time out. I loved every bit of the session. I land up saying this after each of my sessions, right? How I wish I can go on to do these conversations for a much longer time, right? But I'm going to save a lot of my many questions that I have for you for our next conversation, and we're going to have that conversation much sooner, because I believe investors like yourself, right, who are really evangelizing the cause for startups, right, understand both the sides of it, right, understand the investor side expectations and understand the operating aspects, right, need to be out there, right, need to talk a little more, because that's a very unique vantage point that you sit on, right, where you can help both these sides, and it's important for you to go out and speak as much, right? And I'd love to, at Asia Tech, we'd love to be the channel, right, to help you propagate that message, to communicate with the audience. Gaurav, thank you once again for being with us, taking the time out.
Thank you, Ashu. Thank you, Vivek. And I think what you are doing is very important. I think taking out these people to everybody is most important, I think, because whatever we are doing, it will just remain where we are doing, but it can go to other places with your help. So thank you for this. Thank you for this.
Thank you, Gaurav. Loved it. Thank you.
Thank you. Bye-bye.